Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about Paysafe again, following a tough day for the stock price, falling around 16% from where it was at the end of last week. In this video we'll cover exactly why this has happened, what the options are from here for investors and what we can expect from here as well. As part of this we will also touch on a potential silver bullet which nobody else is talking about but which really could have a massive impact on the stock price, completely changing the game. Now, I don't say this next thing with any pleasure at all, as I'm sure a lot of people may be in the red here with Paysafe, but stick around because we will discuss the various dynamics here. Without wanting to repeat myself again and again, I exited my position in Paysafe very shortly after the completion of the SPAC merger, as I've always said I would do from my first video on Paysafe when it was BFT. As I've always said as well, I would not reinvest into Paysafe before the private equity investors have exited, so despite this decrease in stock price, I've not reinvested and I will not until this dynamic has passed. Also, I want to address something which a number of people have been discussing in my videos lately too, especially my last Paysafe one. Why was I so sweaty and why don't I get an AC? Well, firstly, the lights in this room are incredibly hot and I live in an apartment in central London which was built way before AC was ever a thing. Also, anyone who knows the climate in London will know that we rarely have a day which is warm enough to warrant AC. That video was filmed on our hottest day of the year and I sacrificed using my noisy standalone AC unit for the benefit of audio quality. Sorry for that, but bear with me. Before we get into it, please smash the like button. In our battle against clickbait on YouTube, when you do like the video, it's so helpful in letting the algorithm know that it doesn't only need to push the clickbaity content. It's massively appreciated and it helps out the channel a lot, so thank you. If you're new to the channel, then make sure you're subscribed. If you want to see more content, then check out the Patreon for the private Discord, live video calls and other things. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So at Friday close, Paysafe was trading around $10.30, and there was some optimism ahead of the results filed Monday pre-market. Over the course of the trading day on Monday, however, Paysafe fell to a low of around $8.50, about 17% from where it was the week before. So pre-market hours, Paysafe filed its Q2 results, and they were not bad. They filed revenues of $384 million, which was a growth of 13%, and adjusted EBITDA of just less than $190 million, reflecting an 8% increase on the previous period. Importantly, total payment volume was up by 41%, reflecting a less positive performance in the price growth. Now this is something which I expect Foley and his team will focus on, as it is important to drive the pricing growth too and not just capture the volumes at the expense of pricing. Well, fundamentally, this is due to the guidance for Q3. The company confirmed growth on track with its original full-year budget. However, this has fallen quite short of Wall Street consensus estimates, missing them by roughly 4%. Not massive, but it clearly has a significant impact on the stock price. Now, this really comes down to the point of growth forecasts and how important they are for growth stocks, especially those which are high beta stocks like Paysafe and other gaming sector stocks. So yes, this is very painful, but in my opinion, this is probably an overreaction by the market. However, time will tell. What's also important to keep in mind is the impact that this could have on analyst forecasts and their price targets. Clearly, any downward revision would have a big impact on the stock price, so perhaps the market has reacted in expectation of this. Who knows? But what are the options from here? So look, if you're in the red on Paysafe, the first thing to remember and keep in mind is that you're not alone. Many people are in a similar boat. In the course of my investing career, both personally and professionally, where it's my full-time job, I have been invested in companies which during the period of that investment period has been in the red at some point. The important thing here is not to make an irrational, emotionally driven decision. This is easier said than done, but this is really important. If this is all you take from this video, let it be this. Do not let emotion push you into a rushed, unconsidered or irrational move. You need to consider why you originally invested in Paysafe. You must have believed in the company's ability to execute on its growth strategy, capture market share and become the market leader in the verticals which it's aligned to. This all takes time, and you've backed Foley and you've backed the company. And this recent stock price movement does not change any of that investment thesis at all. Foley is long-term focused, and this is something which has always been clear with Paysafe. It's a long-term investment. It takes time for the company to deliver on that strategy. It's also worth talking about the fact that the acquisitions recently made in Pago Efectivo and SafetyPay do not seem to have been particularly well received by the market. Foley is hugely experienced in doing good deals and integrating them effectively to create value. If he can do the same with both of these companies, drive good synergies and drive growth from them, then he'll be proving the market wrong and that will be good news for the stock price. Again, this doesn't happen overnight though. It takes time and you need to be patient. If you invested in Paysafe and you've done your DD, you know that what the long-term strategic vision is here. The company's ability to execute this plan and deliver it has not changed as a result of the stock price decrease whatsoever. It is what it is. Now this clearly would be a serious concern if, say, Foley had given up, for example, but he hasn't. It's just the market reacting to the news from the results. So I did mention at the start of the video a golden bullet which Paysafe potentially has which is not being discussed at all, but it really could potentially be a game changer here. So one of the private equity investors which we've been talking about for ages in Paysafe is CVC. Now this is not about when they will exit, this is totally different, but it's related to them. Clearly the current stock price does not represent a great return for CVC, and it's clearly within their interest to try and seek any way they can to increase this value to benefit their ultimate exit and drive their greater returns. CVC have recently acquired La Liga. This is the premier division for football, or soccer I should say, as most of the audience on this channel is actually based in the US, in Spain. This is the league which teams like Real Madrid, Barcelona, Atletico Madrid all play in. Now they've also invested into the Six Nations rugby competition in Europe. Now you're probably thinking here, so what? Well, sports betting is massive in football or soccer and rugby, and this is a great opportunity to help Paysafe position itself as the preferred payment provider to those companies licensed to provide sports betting on those markets. This could be done in a way, say, through preferential access, which Paysafe could offer the betting partners, which for CVC themselves and the businesses they've invested into would cost nothing, but could help drive massive value for Paysafe. CVC is a huge firm, there are hundreds of investment professionals there, so who knows whether this will be something that they get round to ever discussing, or if it ever happens. But undoubtedly, if it could, then it could be massive for the company. Clearly, there's an alignment of interest with CVC here, as they want to maximise the stock price for their eventual exit. Now, in summary, I think the market has likely overreacted slightly, but I think it will stay beaten up for some time. Let Foley deliver his strategy, prove his expertise and demonstrate that he knows what he's doing, and in turn, in due course, this will be received positively by the market. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed. Check out the Patreon group for more information and exclusive content. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.